Folks, we have earnings week coming up, and we have a lot of trades that we're going to be talking about. Some of them are going to be options trades. Others are going to be common stock trades. For this purpose of this video, in all probability, unless I say otherwise, these are going to be common stock trades. Earnings trades coming up this week, Tesla, Netflix. I'll leave those for a separate video. If you're not currently subscribed, please subscribe to see my new content. We already did have an earnings trade on BlackRock. We booked probably about a 95% profit on that trade using a strategy called a Strangle. Use the link below. If you're not familiar with what a Strangle is, free video tutorial, and it'll get explained to you. It's our favorite way of trading earnings. How was our week last week? It was pretty good. As I mentioned, we traded BlackRock, good profitability there. Amazon, Netflix, Tesla, all profitable trades. So what we're doing here at the Contrarian Trader is that we continue to use cash flow strategies, trying to stay as market neutral as possible with our speculative trading account, while in our investment portfolio, building on our gold mining stocks, silver mining stocks, which have been getting beaten up. And these are opportunities. And in fact, we added more to our NUGT trade last week, leverage ETF, putting you long of the gold miners. So what we're going to do for the purposes of this commentary, I'm going to walk you through TrendSpider. TrendSpider is the next level in charting. They have brought what institutional investors have had at their fingertips to the investing public at a reasonable price. So if you're interested, after we go through this demonstration and our scanning of potential trades for the new coming week, use the 35% discount code below over at TrendSpider, 7-day free trial they offer. I believe in it so much that I give it away free to our silver and gold level members. So let's get to it. All right, what we're going to use is the bullish 6 candlestick bullish roll scan. It's one of my favorites. So let's get to it. And I did not build this. I stole it from somebody else, and you can do the same if you decide to get TrendSpider. And the scan that we want to use is this one here. Notice how I have these all set for weekly. So in this market environment, you can see that we have a whole host of opportunities to choose from. But in this market environment where we're possibly putting in a short-term bottom in the market, I want to stick with the larger cap, more familiar names. So right off the bat, names like Apple, AAP, which is Advanced Auto Parts, Adobe, they make a lot of sense. But what I'm going to do here is I'm going to pick my top 5 favorites. Now, if I chose all of these search results, this video would be about 3 hours. So I'm going to spend some time and I am going to choose my top 5, and I will come back in a brief moment. Okay, and we are back. It didn't take all too long to go through these. I have symbols, AAP, Advanced Auto Parts, Apple, which you would have thought would have been a obvious one since it appeared on our scanner. It's a large cap stock. No, we're not going to trade that one. I'm going to show you the reason why. Adobe, looking really good. ADUS, which is a healthcare company. Dollar Tree, another one. Initially, wow, I saw it on the list and I said, okay, great. But I'll show you why we're not going to go with Dollar Tree. LUV, which is Southwest Airlines, and MAR, which is Marriott. So let's get to it. Let's take a look at these names, and we'll begin with AAP. And for members, I'm going to be posting our buy point price, our target price, and our stop loss price in the members area. That should be updated by Sunday evening. And in fact, for those folks out that are watching, I know that roughly 50% of you are not subscribed to the channel. Please subscribe to the channel, click the like button, and we go live every Sunday night Futures Live. So if you want me to review one of your symbols, enter the symbol in the comment area, leave whether or not you're bullish, bearish, your observations, and we'll talk about it tomorrow night. I give priority to members, then to those who comment on these videos, the best stock chart videos. And if we have time, we'll take requests from the audience. So let's get to it. All right, let's go with AAP. Now, AAP, you could see last week broke out of a multi-week consolidation. We have a higher low. Prior low was back on the 13th of June. New higher low the week of July the 4th. Last week, a continuation breakout. Good stuff. We've been in a downtrend for several weeks now, and we remain in a downtrend. So we don't want to get aggressively long here with advanced auto parts because it still needs to show us that it's got the ability to rally through some resistance levels above. Now, when you throw on the automated trend lines, and this is what the institutions have had for years, and now it's available to you, the retail public, you could see that by a click of a button, I know exactly where the breakout point was. We had recaptured support the week prior to last week continuation breakout. Volume last week rose versus the prior week, still below the moving average, but it's good to see that volume is rising. Now, our strategy here is going to be pretty simple. We're going to take our crayon out, so, and there's our breakout point. What I like to see with advanced auto parts is that we do a retest of support, and then we could open up a long position. This is not a market environment where you want to go chasing stocks because we remain in a bear market, and chasing stocks in the bear market is never, ever a good idea. This is not a momentum market unless, of course, you're shorting it. And I wouldn't even advise that right now because it looks as though we are probably going to get some upside. Touch, bounce, and we'll keep this active for a couple of weeks. So our alert is now set. You could find it right here, AAP. We're good to go. Now what I want to do with AAP is bring up seasonality. Now, seasonality is a very powerful tool to have at your disposal. Now, we want to go back at least 10 years, 11 years. That's good enough. So what we can see here is that over the past 11 years, AAP is up 73% of the time, whereas in August, it's up only 44% of the time. So this is going to be a good one for a trade. We'll use a trailing stop loss order, and we'll let the market take us out of the trade. Now, I'm going to bring up Apple. I'm going to share with you why. First, I'm going to take off the automated trend lines just to illustrate the value that they have. Because when you take a look at this weekly chart of Apple, I mean, this is a good-looking chart, no doubt about it. But when you overlay the automated trend lines, you could see that we are up and into resistance levels. And it would be best either A, for us to break out and retest this support level here, or see a full retracement back down to 146 per share. Let's see if that support level holds. And then we could entertain opening up a trade in Apple. But right now, we're at resistance. We do not want to buy into a resistance level. We want the shares to come to us. So Apple is not on our list for the new trading week. Adobe is on our list. Now, Adobe is usually one of our favorite earnings trades, but they don't have earnings coming out for several weeks. Now, you can see that we have a very nice consolidation. Let's bring up our automated trend lines. And you can see that just by click of a button, that this is clear and defined support. So what I want to do here is I'm willing to buy on a breakout, but I want to know if we break down through the support level because that takes us out of the trade. So we're buying right next to a support level. So we want to make sure that we're notified immediately if and when we break down through this lower band of support, especially if we close there. So our alert is set. Now, when would I buy the shares? I would buy the shares around here on a close above 394 because right now we're trading just below resistance. And in fact, we may use that as well as our stop loss point if we buy through on that breakout. And our alert is set. So right now, Adobe remains a watch, but one that if it performs well next week and it either A, breaks out above resistance or B, pulls back to this lower band of support, we could look to enter a trade on Adobe. The next chart up, and I really like this chart, ADUS. Now you can see that last week we had broken through resistance, new weekly higher highs. Now when we take our crayon out and we draw where we'd like to buy, it's right around in here. Because what we did last week is you could see that we broke through resistance, and I want to see a pullback and a retest of the support level. We'll keep a little bit of sensitivity on. There we go. We want to get notified pretty quickly. And I can't tell you how excited I get when I see my phone light up with alerts like this. These alerts allow you to control your impulsivity, and it's still disciplined. So you're not buying ad hoc. So we want to know if we touch, bounce, and our alert is good to go. So it's ADUS. Let's take a quick peek at a daily chart. Yeah, the daily chart, you can see, we already have an alert set up here. So that's why it's got a little bit of a purple haze over it. Clearly showing that on Friday, we broke out. I'm very confident that we're going to pull back and do a retest here. ADUS looking very, very good. Quick peek at a monthly chart. I mean, when you take a look at a monthly chart, this is a stock that's held up very, very well in a market that has been tremendously difficult. And if you go back to 2018, we've been in this trading range for many, many years. So if we get a breakout here on ADUS, I always bring out my old adage: the greater the consolidation, the greater the validation of any breakout. So as a reminder, members, what I'm going to do is in the members area, I'm going to put in our entry point, our price target, our stop loss point on ADUS. Now, another chart that attracted me, or symbol I should say, the chart didn't attract me. Dollar Tree, great stock, weekly time frame. We could have an inverted head and shoulders here. Left shoulder, head, right shoulder. But when I bring up the automated trend lines, what they're telling me, this is a click of a button, folks. What they're telling me is that we have resistance immediately above. So I can't buy this stock right now. What I can do is create an alert, because we certainly don't want to go buying into resistance. That's horrible trading behavior. But what we can do is show some discipline, wait for the breakout, and we'll keep this active for a few weeks, because I do like the setup here. It's just that I'm not ready to buy just yet. And it's going to take a good portion of the week next week for me to be confident to enter the trade. Why do I say that? Well, if my alert fires off on Monday that we are above this upper band of resistance in green, well, it really doesn't matter on Monday that alert fired off. It'll matter on Friday whether or not we close above that resistance level, if that makes sense, because it could fire off on Monday but then fade by the end of business on Friday. So we don't want to get too aggressive here. We're open-minded, but not willing to hope when we should fear, especially in a market such as this. Now, the other stock that is on our watch list for this trading week is Southwest Airlines. Weekly chart, and if I take my crayon out, you could see that last week we broke out above this upper band of resistance. Now, what do? Do we chase it on Monday morning? Absolutely not. What we want to do is we want to create an alert. We want to know when LUV pulls back and does a retest of weekly support. We'll keep a little bit of sensitivity on. Doesn't have to be to the penny. Retest a breakout point. And we'll keep this active for a few weeks. And there we go. One other thing I should point out on this chart as well is that when I take my crayon out again to show resistance, you can see that we did close at a resistance level last week. That's why it's so important to wait for the pullback and a retest of the breakout point so that you're not buying into a resistance level. And if we fail to hold where our trade alert is already set up, well, then we know that we need to stop out of the trade, because that would be a breakout point failure, also known as a bull trap. Now, the last chart up is going to be Marriott. Marriott looks very, very similar to LUV in that it broke out above resistance. Now, what I want to see here is a retracement. And again, we'll keep this active for a few weeks. Touch, bounce. And we set it and forget it. And that is it for this week, folks. Don't forget, tomorrow night, Sunday Night Futures Live. If you want me to review any of your symbols, please, on this video, enter your symbol into the comment section. Like, subscribe to the channel. In your comment, please let me know whether or not you're bullish or bearish and why on the stock. And we'll talk about it tomorrow night on Sunday Night Futures Live. And if you're new to technical analysis, I have a 5-part video tutorial. All you need to do is click the link below. It's free. 5-part video tutorial on my top 5 favorite candlestick patterns. And you'll also get notified if you're on that email list of when we are about to go live, roughly about a half hour before we go live. So, folks, everybody have a profitable trading week. Enjoy the remainder of your weekend, and thank you for being here. And I hope to chat with you tomorrow night. Be well.